There's something strange happening in the payment system, and almost no one is paying attention. While you swipe your card, type your PIN, and move on with your day, a network that many people still call experimental is already moving more money than the biggest names in global payments. This is not a promise. It's not a projection. It's real flow happening right now. And what's most curious is this. It didn't happen through advertising. It didn't happen through billion-dollar marketing campaigns, and it didn't ask permission from anyone. Most people see Ethereum as just a crypto. Some see it as an investment. Very few see what it's actually becoming. Because this news isn't about who won or who lost. It's about how money itself is starting to move. Credit cards were built for a physical, centralized world full of intermediaries. Ethereum was built for a digital, programmable, global world from day one. When a new infrastructure starts carrying more value than the old one, that's not a coincidence. It's a signal. And signals like this usually appear long before most people understand what's changing. The question isn't whether Ethereum will replace credit cards. The real question, a much more important one, is this. What happens when money no longer needs them? That's where the story starts to get interesting. Before jumping to conclusions, we need to clarify something important. When we say Ethereum moves more money, we're not talking about the token price. We're talking about value transferred. Money leaving one place and arriving at another. Payments, settlements, transfers, contracts being executed. In the credit card world, that path is long. You swipe the card, the request goes to the network, then to the issuing bank, then to the acquirer. Each step adds fees, delays, and points of control. On Ethereum, the path is different. Value moves from origin to destination directly on the network, validated by public rules, recorded in real time, without asking authorization from a specific intermediary. It's like comparing a highway full of toll booths to an open route where the rules are the same for everyone and known in advance. When data shows more money flowing through this new route, it doesn't mean everyone abandoned credit cards. It means something more subtle and more profound. The alternative system is no longer marginal. Companies, protocols, individuals, and applications are using this infrastructure. Because for certain types of transactions, it simply works better. Less friction. Faster settlement. Programmable rules. And that reframes the question again. It's not Ethereum versus credit cards. It's which infrastructure makes sense for the world that's emerging right now. And to understand why this is happening now, we need to look at something even bigger, the kind of money Ethereum makes possible. That's where the game truly changes. This shift isn't happening by accident. It's happening because Ethereum isn't just a payment method. Credit cards move money inside a closed system. Ethereum moves programmable money inside an open system. That's the real turning point. On the network, value isn't only used to pay someone. It can execute rules automatically. Payments that happen only if conditions are met. Settlement that occurs instantly, with no chargeback risk. Contracts that rely not on trust, but on visible code. That's why so much money started flowing through it. Stablecoins acting as digital dollars of protocols settling billions without a counterparty desk, companies using the network as financial rails, not as a speculative bet. Ethereum became a global settlement layer running 24/7, no holidays, no borders, no permission from a specific payment brand. While cards were designed for a physical world. With stores, terminals, and local banks, Ethereum was designed for an internet-native economy. And when the economy moves online, money naturally follows. That's why comparisons with Visa and MasterCard unsettle so many people. Not because they're about to disappear, but because something new is already absorbing a type of flow that didn't exist before. The real question isn't whether this will grow. It's where this kind of infrastructure ultimately leads. And to answer that, we need to step away from charts and look at real-world impact. On users, on businesses, and on the system itself. Now look at the practical effect of all this. When someone pays with a card, an invisible process unfolds behind the scenes. Settlement that takes days. Fees spread across the chain. Chargeback risk. Intermediaries deciding what goes through, when it goes through, and who it goes to. On Ethereum, the logic is different. When a transaction happens, it ends there. Value leaves one side and arrives on the other with final settlement. No reversals, no later disputes, no dependence on banking hours. That changes the game for payers, recipients, and businesses. Companies rotate capital in real time. Global platforms operate without negotiating with dozens of local acquirers. People in different countries use the same infrastructure under the same rules. And there's a detail that almost no one highlights. The user stops being just a payer and gains direct control over their relationship with money. There's no country limit, no preventive block for security, no intermediary deciding when you can use what's yours. This doesn't mean credit cards disappear tomorrow, but it does mean that for the first time, there's a functional global alternative already operating at real scale. An alternative that doesn't depend on brands or bank agreements or centralized decisions. And once an infrastructure like that proves it works, behavior starts to change. That's when this news stops being just an impressive statistic and becomes a clear signal of transition in the payment system. When you hear that Ethereum now moves more value than Visa and MasterCard, the mistake is thinking about who's winning the race. That's the wrong question. The right question is this: what kind of money is the world starting to use? Credit cards are efficient. Inside a system designed for a physical, fragmented world dependent on intermediaries. Ethereum was built for a different environment. A digital, global, programmable world where value moves like information. This isn't about replacing everything overnight. It's about absorbing what the old system cannot do well. Instant settlement, native global payments, automatically executed rules, and no single entity deciding who gets to participate. That's how real change happens. Not through announcements, but through real flow migrating elsewhere. First, companies test, then users adopt. When volume becomes impossible to ignore, the narrative shifts. This news doesn't say credit cards are finished. It says the monopoly on financial infrastructure has been broken. And once that happens, the game never goes back to the way it was. The only real question left isn't whether this new era will grow. It's who will understand it early, and who will only notice once it's already normal. If this video helped you see that shift more clearly, hit like and subscribe. Here we don't chase hype. We read the signals before they become headlines. And now tell me in the comments, without rushing, do you think we're just at the beginning of this new era, or already in the middle of it without realizing?